Hi, everybody. This is the Bitcoin Critical Pulse. I am Giovanni, and I am here with Chris. And this show, we're coming back after a little break because I'm traveling in Europe, um, and I have been very, very busy with conferences. But we will try to be constant again since now on.
Hello,
Sorry.
Moto.
Yeah. Sorry. I'm going to turn off all my communications. All right. And yes, sorry for that. And it's a particular time because we have seen this very fast and drastic change in Bitcoin price. I'm very pleasantly surprised that Bitcoin is recovering within a few days. It goes back to closer to the power law that is, we will discuss it in a moment, that I think is the particular equilibrium that we have right now. I don't think we are ready for a bear market. Maybe there will be not a bear market, at least not a bear market that we have experienced before. But we will see in a moment all these things. For the moment, Chris wants to remind everybody that we are doing this for educational purpose. We are trying to understand the market, trying to learn from it, but it's not financial advice. In fact, go ahead, Chris, if you want to say more
Sure.
about.
Thanks, Giovanni. Yeah, usual disclaimer, not trading advice. Trading involves risk. This is for educational purposes only. The disclaimer's been up for a while, so I think we can assume that everyone has read it and we can move on to the real discussion at this point.
Good. All right. I'm going to start by sharing one of the indicators that you can find if you join my Patreon program. On the same graph, I'm showing also one of the indicators that Chris developed. And we will, in fact, you can find them in this link below. Let me do that. It. Oh, no. Let me try one more time. You see the screen now? Okay,
Yeah.
Finally we got it. Okay, good. All right, so this is one of the many power law indicators that we have developed. In the upper panel, you see the red line, that is the power law itself. It's what I call a very simple model of a power law. And let me go there for a second. The blue line is a more adaptive form, that takes into consideration the recent changes. It's interesting that it's actually higher, mostly because it's still influenced by the large deviation from the peaks. The white line is what we call the support. So this line, we don't have to discuss the power law in general, even if we have taken a long break. So maybe some people need a kind of a review of the main ideas. But this white line is something that we never crossed in the past. It's a kind of it's not one of these very arbitrary support line that people draw by hand by joining some kind of arbitrary point. It's actually a mathematical thing that we think it has to do with the cost of production of Bitcoin. If you could build it, for example, using hash rate and the relationship between price and hash rate, and then a cost associated with producing this hash rate. Here is a simplification of that relationship by assuming a 60% deviation from the trend line. So if we went down about 60% from the red line, we will encounter this white line. And historically, we never crossed it, even during COVID, for example. The price arrived there and then bounced off. It was kind of almost a stress test for this idea that this line is significant. And we are quite far away from that curve. Right now, we are more like 22. Right now, with the new price, I see that we are back to 91,000. That is close to 20% from the price that the power law indicates. So something right now close to maybe 114, 115 is what the power law says. And so we are not very far from it, 20%. It's a big deviation. It's comparable with some of these major deviation that we had in the past, like the one in August, the one in April. So it's not anything too drastic. It's big, but something that we have seen in the past. And there have been, maybe Chris will discuss a little bit more. There have been some theories of what happened, not really manipulations, but in fact, Chris will have some interesting things to say about all that. Some interesting mechanics of how the market is structured right now. Bitcoin is, it's not regulated. It's not too much regulated, and it's supposed to be decentralized, but up to a point, because we know very well that there are some central point of failures, like the exchanges, for example. Until we move to maybe completely decentralized exchanges that they are not super popular right now. They are used, but the central exchanges are used more. We will still see things like that. Maybe with time we will become better, also because we have bigger players. But I let Chris discuss all that. But the second indicator that I wanted to show, well, before we go there, so everybody knows that we have not had a proper bull run, right? Because I don't have to say too much about that, but you can see what happened even the previous bull run, right? We had a huge, big deviation from the power law. This white line here doesn't have a major particular significance. It's just, some deviation. I don't remember how much, probably 20% or something. And you can see we went much above, up to, I think last time these peaks were almost to like 50%, 5 times bigger were relatively to the power law. Just to give you a feeling, for example, this line, the power law during the second peak, my way of thinking about this is that we had 2 peaks, one early and one in April, and then one later on in the end, close to the end of the year, kind of beginning of November, more or less this period. We had a peak, and this deviation, was close to 65 when the price was more like 25. So something close to maybe 3 times relatively to the power law, 2 or 3 times relatively to the power law. In the past, the bubbles went even 10 times bigger than the relative price of the power law. And then the reason why we still have a power law overall is that we went as much up as much down, and basically the bubbles canceled. This time, we had some tendency, right? It started in November to go above the power law, and then we started to oscillate around the power law back and forth without having something bullish. My estimation, because and some people give me a hard time for that, and I don't get it because it was one of the most sensible and conservative estimate relatively to people that were screaming 500k, a million, this cycle, right? They meant within November or December, right? Because the cycle is supposed to finish this December, and people were screaming all these crazy prices. Almost everybody. I was one of a few people that say, well, if you consider the decay, that it's a real thing, it's not imaginary, then we get only 80%. That is what I was saying. And if we had an 80% deviation, we were going to be close to 200K. And we didn't see that at all. So this is not that the method was incorrect. That was an hypothesis. The hypothesis was that there is a trend. There are these peaks. There seems to be very regular deviations, and this deviation seems to decay. In fact, in a sense, was kind of an upper limit. Was like, yeah, if we have a deviation and it follows what we have seen in the past, we will not go too far, because together with the deviation, there is also this decay that seems to make the bubble smaller and smaller in time. It makes sense because as you have a bigger market cap, it's more difficult to move around a lot of money in a short amount of time. So, to go to 200K, we will have to add basically trillions of dollars coming in, because right now, at 100K, the market cap is 2.1 trillion, because you can assume basically we have mined all the coins, right? You can multiply that by 21 million, whatever. And we are very close to that. And so we will have needed another 2.1 trillion. Now, there is always a multiplier. It's not one-to-one, to reach a certain market cap. You don't have to bring in the same amount of money. The market reacts more to inflow of money in terms of price. It's almost like a valuation, of a core company. But still will have been hundreds and hundreds of billions of dollars coming in, and so it's more and more difficult to get these huge big deviations. But I am the first one that was surprised that the bull market is so muted. But the idea is, if we don't have a bull market, maybe we don't have a bear market, And so I will be surprised if we go back to that white line, at least in short amount of time. Maybe we don't go back there anymore. Maybe we simply oscillate, and the worst that happens are these like 20-30% deviation from the power law. I don't know why they are not symmetric, why we don't see also 20-30% above the power law, something that needs to be understood. But that is my thinking right now. Now, the other indicator, and then I will leave the floor to Chris, is the one in the second panel. This one is basically this idea that I have introduced recently. I call them local slopes. That is basically, you take the returns of the daily returns of Bitcoin. Simply, these are actual real. It's not a theoretical value. It's an actual real return. So you take the price today of the price yesterday is a ratio, right? If it is above 1, it means that we went up. If it is below 1, it means that we went down. But these returns in time, they became smaller and smaller. You can actually make a drawing, a plot of that. It's visible by eye. You can see it's going to be a bunch of dots that they are decaying in time, because that is what the power law implies, that we went from making 10 pair in a year to about 45% now a year. Why we didn't see this 45% this year, it's an average. It's an average kind of thing. So one year we go a little bit higher, another year we go lower. It's an average. But one can take away this decay. You can write, if a power law is correct, then you can normalize, you can adjust for this decay, and you get these, you can call them normalized return. Basically, these are returns that are always valid because you're adjusting for this decay. And if you go through the math and assume a power law growth for the price, it turns out to be basically an average slope, the daily slope. So it's a number in average. You can see this orange line there in this graph that is 5.9. And the point of this is that the actual slopes are indicating if we are in a bullish region or period, or if we are in a bearish period. And you can calculate different time frames. Like, for example, the blue line represents this quantity over a couple of weeks, and the yellow one is a more fast responding because it's calculated over a period of 3 days. And you can see we are simply oscillating around this value, because until we oscillate around this value, that is the orange line, the white line is simply 1. It basically means no, actually zero slope. That means we are not going up or down, right? But if we are above the orange one, we are doing better than the power law. If we are below, it means that we are going in the other direction. We are getting losses, right? These are days where we have losses. But in general, you see, right, the blue line is deviating from the orange line. But in the past, we had kind of similar deviation. It's a big one relatively to others. But it seems that it wants to correct, right? It wants to go back to the orange line. And the yellow line at short time scales is simply oscillating around the orange line. Now, the red and green line represents like 1 sigma deviations relative to the blue line. That means, like, most of the deviations that we observe are within the green and red line. So it's a way of tracking how close we are still are to the power law, not just in terms of the price itself, but also the returns that are the changing price. So everything seems okay. We have a large deviations where it seems that we want to go back to the mean. So there is nothing to be worried about. That is what I will conclude by looking at the data. Anyway, so Chris, we can look at the critical pulse indicators. Maybe you want to say something about some of these things that I mentioned about what caused this large, not just 2 days ago, but also almost a week ago. What is happening in the market, in your opinion, given Chris has a long experience in working in the Wall Street world, so he can give us some insights that maybe are missed by other people.
Sure. So thanks, Giovanni. It's been a while since we did a podcast, and a lot's happened since the last one.
Do you want to share your charts, first of all?
Yeah, I will. Hang on. So when did you head to Europe? It was a while ago, right? More than a month
I
ago.
arrived here October 1st.
Yeah. So we've missed October and November, and a lot's gone on since then. And we really should talk about that. I tried to address all of these major events in 2 newsletters that I published that are available by signing up to our website. And for anyone who doesn't have those but would now like to get access to them, I've created a Substack, so you can go there and sign up for that if that's something that you
And
want
by
to
the way,
do.
they are amazing. Like in particular, the last one was is almost like a mini book, about many interesting topics. So I really suggest everybody to go and read them.
So I'll put the link in the chat in a minute, but a heck of a lot happened, and if you can see on the chart, this was the big spike down that we had on that Friday in October when everything went a bit pear-shaped, and people started really wondering what was going on. And then subsequently, the market cascaded away until we hit the lows last month on the 21st, and sort of moved off from that. And everyone's been trying ever since we sort of reached the all-time high, trying to figure out what's precipitated these events. And in one of our prior, or maybe even a couple of them, podcasts, we talked about the structural change that's occurred in Bitcoin. The people who are participating in the markets now, the agents, the millions of different people who are buying and selling Bitcoin have many different motivations. And as Wall Street has adopted Bitcoin into its asset mix, and when I say Wall Street, I mean not just firms that trade, but asset managers, people who manage money for institutions, for individuals. So these are financial advisors, all the way up to the large asset allocators who have pools of money like pension funds, endowments, and so on, sovereigns even. So all of these different agents are in and out of the market at different points in time. They all have different priorities and different imperatives, different risk control measures, different limits, different time horizons, different investment horizons. They're all totally different. And over the last several years, we've had the introduction of ETFs. We've had the proliferation of treasury companies like Strategy or MSTR. We've had many, many different entrants to the market that simply weren't participating in Bitcoin when a lot of these extreme events, high peaks and so on, were occurring in prior cycles. So those are very, very significant structural changes, and it changes how the market interacts with itself. And essentially what's happened is that Bitcoin is now interwoven in the balance sheets and the fabric of mainstream finance and Wall Street. And that's a process that's inextricably moving forward. The two are bound to each other. And as a function of that, you get the impact of reflexivity, which was made famous by George Soros in his book on that topic. And all that reflexivity is, in this case, is the interrelationship of instruments to each other and the cascading effect, the knock-on effect of the movement of one to the other. So you can start to look at correlations between major indices. So, for example, the NASDAQ or the QQQs, and how that impacts the price of Bitcoin, and what the flow-through effect is and the amplification effect of that is. And all of these things are written about in the newsletters that I published. The first one in October really addressed this major event that occurred here. And there were several things going on, and it continued down through until just this past week or two. The other things that were happening, and there's another chap that publishes some really interesting research, a guy called Jody Visser, and he talked about the silent IPO. And this is the monetization by the OGs, the original guys, the original participants in Bitcoin, who acquired vast quantities when it was in double, triple digits. And they've been sitting on this, and they have thousands of these Bitcoin that they've accumulated. And it's very analogous to an IPO. So with an IPO, someone who creates a company decides to go public. They do that because it's a realization event for them. They're able to capitalize and monetize the work that they've put into building and creating that entity. But it also gives the company operating capital to continue its business strategy. In the case of Bitcoin, if you're sitting on thousands of Bitcoin and you seek to move them in volume when the market is immature and there's not a lot of daily volume, not enough to accommodate the sale and transactions in vast quantity, then you're going to move the price dramatically. And now that we've had this advent of ETFs and the institutionalization of Bitcoin into traditional portfolios, you have more liquidity than you did previously, which means that these OGs can actually liquidate their holdings without disrupting the market too much. Now, it looks like a lot of disruption over the last few days, but in the overall scheme of things, it's not too bad considering where they got in. So there's a whole array of these dynamics that occur. And also, Giovanni mentioned that Bitcoin is this decentralized mechanism that transacts on multiple exchanges that really are not regulated in the traditional sense. Some are because they're domiciled here in the US, but others are not. A significant number are not. And for that reason, you get differences in the prices that appear on these exchanges for the same instrument. And the reason for that is that you have different people operating on those exchanges for all sorts of very specific reasons. You have liquidity differences between the exchanges. You have transaction cost differences between the exchanges. And ordinarily, arbitrageurs will step in to keep those differences to a minimum. But when price activity becomes extreme, all of these agents that are operating, the arbitrageurs, the various oracles and exchange participants that make prices, a significant number of them, the vast majority, in fact, are bots in one form or another. And a bot has one mission, and that mission is to survive. So a bot will, if it detects that there's extreme price activity or something that is not usual price action, it will widen its bid offer spread, or it will just step away from the market. And when that happens, the liquidity that you observed a moment ago is gone. And that creates gaps, that creates discontinuity in price action. So all of these things that I've just talked about are structural issues. And these structural issues are what's now dominating a lot of the price activity in the marketplace. And this is described at length in newsletter number 2, and again, subsequently in newsletter number 3, particularly with regard to treasury companies and the amplification effect of volatility and the feedback loops that occasions in price activity. So getting back to these charts, we were back here in October, and we were trying to figure out what was going on when the market was coming off this peak and starting to move down, and we were thinking that maybe we're going
Is that the all-time high that we had?
Yeah, 126, whatever it was, 126 and a quarter. So we had this move down through this period going into October, and then this run up into the peak, and then this very large sell-off on that Friday. And that coincided, of course, with the announcement of the US government relating to tariffs. So that threw a shock into the market. It caused the NASDAQ and the traditional US stock indices to fall dramatically. A lot of this action occurred post the close of those markets. But Bitcoin took the brunt of it. And there were a lot of liquidations, forced liquidations on some exchanges, because of the algorithms that are used on those exchanges to liquidate people when they go into margin calls. So all of these things in combination conspired at the same time. And when you get that sort of coherence of activity, that same, everyone trying to do the same thing, everyone heading for the fire exit at the same time, you get this extreme price movement. And because as we moved forward into November, we saw the correlation of NASDAQ in particular increase versus Bitcoin. You saw this cascading effect. A lot of the people who are arbitraging strategy, MSTR versus Bitcoin, saw the MNAV of Master collapse from its inflated levels, way back here in these sort of peak periods to closer to 1. And that allowed them to unwind their positions, which meant they became sellers of Bitcoin and buyers of Master as its price declined. So all of these different dynamics that did not exist 2, 3, 4 years ago, certainly at the last cycle peaks, are now in play. and we can't escape them anymore. They're embedded in the system. So where are we today? Well, this is the daily chart for Bitcoin, and you can see that for the first time in a while, we've reached a floor that seems to have extended a little bit. And using one of the tools that we have, this TPM, temporal phase model, which identifies attractors and gravity whirls that the price is structurally drawn towards, is showing us that we have some higher targets that could well be in play here, 92,000, 97,000 in the daily. And as you go into lower time frames, which is what you see here in this screen, these are 1 minute, 30 minutes, an hour, all the way out to weekly. You can see that we've over time started to have price and targets move towards the to the upside. So in the lower time frames, you see this classic type of formation right here, where the pulse separates from the static and you get a move up, and it's reflected in each of the longer time frames. Some of them are a bit messy. This 2-hour one, you've seen it's turned here pretty aggressively, and this is just a narrowing of the spread between the static and the pulse, but nicely reflected in the 4-hour, the 8-hour, and then the daily, which we're seeing start to separate in this first chart that I was showing you here. I'm just going to expand this a little bit. Hopefully you can see a little more clearly what's going on. So right here, you see the static and the pulse. The pulse is the more reactive of the two indicators, and you can see that these two are running parallel with each other. And what we're looking for to occur next here is for the pulse to separate and move upwards and look to chase these gravity wells that we've identified are likely to draw price towards it. So just generally, I'd say that this structure, and this is something that I think, Giovanni, we should talk a little bit about, because your tool is really what I would call the sort of macro view of Bitcoin. It's giving this long-term suggestion of where price is likely to map to, given various constraints. There's a decay curve, but the price of Bitcoin is not reflecting the same path that it did previously. And that's because the amplitude of the phases, the length of the phases is all changed. And it's all changed because of these structural shifts that I talked about before. So we're looking at a system that is essentially valued on the basis of a growth in the network. And that's reflective of Metcalfe's law. But Metcalfe is really giving us the geometry of participation, but it's not giving us the granular stuff. No. What these tools, the LPPL, is doing is trying to help identify how the system moves around within that geometry of Metcalfe law. So really, the combination of the two is what's powerful. One, you've got this large, roadmap, which is your tool. The log periodic power law is applied to Bitcoin. And then the suite of tools that I've developed, which are really the GPS that tell you how the path is going within that larger roadmap.
Yeah, it's amazing.
So I'm just going to get the link for the...
You're putting it in put it in the general chat.
Let me just.
You can also. Because it's really worthwhile, Chris. I couldn't help too much. I'm going to contribute more to the next newsletters. I have already some interesting topics I want to discuss, but I was myself surprised by how much content there is. You will not find so much information about market in general, how markets respond to different things, but in particular, so focus on Bitcoin's behavior. You will learn a lot. So sign up for the newsletter, but also go and catch up with the previous issues, and Chris is going to give us a link where you can find them.
Giovanni, I'm having trouble putting it in. I just sent it to you. Can you get it?
Yes. In fact, maybe I can do. Yes. Yeah. Let me do one of these rolling screen so people can check it. Yeah. So what is going on at this particular moment? What do you think is going to happen in the next? Can we make? I know that you don't like much to make predictions about price, but the state, what the indicators are telling us about the current state?
Well, I mean, I kind of said it before. We've had this whole series of reflexive events that have washed through the market over the last couple of months, and it's shaken out a lot of leverage. A lot of people have kind of been, pushed out of the market and aside for the moment because they can't, stand the volatility, or they've been stopped out, or for whatever reason it is. But what we now have is the price of Bitcoin having it's sort of moved to the lower bounds of your power law plot, reflecting the sort of value, if you like, in terms of Metcalfe's law, but it's not really value. It's more a bottoming signal of state classification, because all of the froth that was in the market at the peak has been exorcised. It's been purged from the marketplace as a function of the price activity that we've seen over the last couple of weeks, month or so. And now we're going through this reset period. And remember that the white states with the LPPLCP is where the market is seeking resolution. It's trying to figure out, okay, which way am I going to go from here? And that's determined by the agents, the people who participate in the market. And as they start to get a little more comfortable here and think, okay, well, maybe in the $80,000 to $90,000 range, Bitcoin represents value, they'll start to accumulate more. Maybe there are doubters who think that that's not the case, that we've got more downside to go. Well, right now, our temporal models, our TPMs, are suggesting that there's more energy being generated to the upside, which is what these sort of gravity wells, I like to call them, or structural draw levels, are starting to generate, suggesting that price can move up again. And that's what you see in these levels that are showing on the screen here. And this is scale invariance. If we go to another time frame, so this is 8 hours. Let me just let this load a little bit. It takes a while because there's a big, and you can see this type of separation that we had here. And I'll just expand it a little bit so people can see a bit better.
Yes.
So this is essentially the same pattern that we're seeing unfold in the daily chart that I just showed you. We've got these two parallel lines. The top one is the pulse, the bottom one is the static. And here we have a little false start, a little almost parallel separation, not a good signal. And then we get this almost vertical, very acute angle of separation of the pulse from the static. The purple, again, being this sort of representation of period doubling of price agitation.
Yeah.
And then it moves away aggressively. And
so I think, like, one thing I say, that correct me if I am wrong, that this sudden change in this direction due to systemic issues, given where we are in general, there is a lot of returning force, right? That the market does want to go back to that general trajectory, right?
Yes, that's a reasonable generalization. But what you'll notice here, though, is I've got a gravity well or a structural draw area down here at 81,000 still, and I've got a couple of others that have been hit. We've achieved them up here in this 89, 90,000 range. This is the 8-hour time frame. So you may ask, well, how is it possible to have active levels of structural draw both above and below price? And the answer is that's very normal. It's a very normal thing to happen. And the reason is that at different points in time, the activity involved in the market will generate these attractors, and they remain valid until they're invalidated. And they're invalidated in one of two ways. Either they're hit, and you can see in the little table here, we've got a range of them that have been hit, and we have others that are active. And one of two things happens. If it's not hit, the other thing is the passage of time and price activity eventually degrades the efficacy of the attractor, and it's sooner or later replaced with an opposite attractor. So this level down here is still in play for the moment in the 8 hours. And let me just see if I can show something else here that's a little bit interesting. Hang on. Okay, these are a couple of different tools that I have, but if you can focus on these little tables up the top here, these are temporal phase models that I have, and they're showing here for several different timeframes, 8 timeframes, and they're in various stages of evolution depending on which one you're looking at. Some have got some active lower levels and some active transitional levels in the yellow. That means that the current bar is active and is generating new levels. A lot of them are hit, but what we see often is these tables washing through until they all become green or they all become red. And when they're all green or when they're all red, then that means that the market has exhausted all of its gravitational draw to those particular levels. So here in the 8-hour chart, we've got a mix. We've got an active level down here at 81,000. We've got a couple of active levels up at 90,300 right now. It's live and updating as we're watching. And we've got several hit levels. And what this means is that price is trying to find where the next draw level is. And this process is scale invariant. It happens across all the different time frames. Mm-hmm. So we're looking at the 8 hours now. We were looking at the daily. Let's go back there and just have a look at it, and you'll see that we've got the LPP-LCP has got a similar pattern. It hasn't evolved yet because it's in a higher time frame. We've got several active levels up above the market that we're looking to get to, and we've got several levels that had previously been hit. And you'll see that these are numbers of 102, 105,000. So they were way back here, and they were generated. The 105,000 was generated here when the market was around 114,000. It was subsequently hit here a few days later. And then similarly, another level was identified here on the 2nd and was completed on the 4th. So, and these haven't reset yet. So eventually what's going to happen is these red levels are going to, all that can happen to them is that they can be reset. They can't regenerate a new lower red level, red meaning down, green meaning up, yellow in transition.
Right.
So eventually these levels here will wash through to these higher P4, P5 levels, and these will reset to something different from these levels. And it could be anywhere from the current price to something significantly higher. We just don't know. It's a process of evolution, but this sort of wave-like process occurs with each of these temporal phase models in each time zone. So if you imagine whatever time frames you want to look at, from 1 minute, 30 seconds, all the way out to weekly or monthly, we generate these tables. And these tables are identifying the structural draws, the gravity wells that price is likely to be motivated with energy and action to move towards. And you have, if you think of tides and you think of the lapping of small waves on the beach, that little lapping process moves further up and down the beach, depending on whether the tide's coming in or going out. And then a little further out, you've got big waves occurring, larger waves occurring, that will eventually get to shore and push those little waves further up the beach.
Yeah.
So this whole process of tides moving in and out, of sets of waves coming through and hitting the shore and pushing the water up the beach, and it receding. And then periodically you have extraordinary events like tsunamis or king tides, when all the planets align and they...
Yes, scale invariant processes. Right?
Exactly. So each of these time frames, whether you're looking at the 1 minute, the 5 minute, the 15, the 30, the 1 hour, the 2 hour, the 4 hour, the 8 hour, the 12 hour, the 1 day, the 1 week, the 1 month, the same process repeats across all of them.
Yeah.
And if you're watching multiple tables like this, together with the action of the critical pulse and the static, you can start to observe these, I'll call them trends, start to wash through the timeframes and move price in a particular direction. The white state is when there's exhaustion and confusion, and we're seeking resolution. And that resolution starts with the separation of the pulse. And at the same time, you'll start to see the TPM start to generate these gravity wells, these structural draw levels, in a direction above the market. And when you get multiple structural draw levels within a close proximity. So in the daily, we've got 97,000 here and 97,800 here. If we go to another level, let's see what we've got here. And then here we are in the 8 hour, we've got 98,200. So we have several structural draws across multiple timeframes. Let's see what we've got in the 4 hour. Starting to coalesce. So here's another one in the 4 hour, 98,123. So we've just seen in 3 timeframes, we have levels in the 98,000 range that are starting to stack. And that suggests that there's an impetus for the market to move towards these important levels. And one thing that I would mention, with all of the tools that I develop, they use very different sets of scientific, mathematical, statistical methodologies to analyze the market. Not one of them uses the same methodology. So it's an orthogonal approach, which means that each method is looking for separate and distinct characteristics that might be interesting. And when it identifies those characteristics, we get a signal. And if you have confluence of signals, that is multiple methodologies that are drawn from different disciplines measuring different things, when they start to coalesce and when there's confluence, then that's meaningful. And that is vastly different from traditional technical analysis, where you're essentially using price and stacking signals that are the same.
Yeah.
So
it's very beautiful. And I just posted here a video. It's a channel, actually. The YouTuber that directs this channel is a physicist, is an educator, and he does very, very interesting videos. He's quite popular. And the last video that he just posted, it's on power laws, the significance of power laws in general, and also this type of phenomena that Chris was just mentioning, like, the different waves in the ocean, but also forest fires, right? Mm-hmm. All these events can also be are very similar to what happened in a forest. Sometimes you have small fires, and then you have huge, big fires, that, like these huge, big movements that we see, mm-hmm. that involve entire forests. But usually what happens is that once all the tree has burned, the only thing that it can happen is for the tree to grow back again. And when there are too many trees, the only thing that can happen is that soon there will be a fire. And so it's basically, this is why it's called self-organized, because there are all these feedback loops that bring the system to equilibrium. And if you look at how they are dispersed, the small events, the big events, they actually distribute like a power law. So it's very interesting. And this is actually the particular angle that we are bringing in understanding this phenomenon, because we apply to all the market, but Bitcoin in particular, because it basically responds to this kind of behavior at all the level, from the minute all the way to days, months, years. The overall trajectory of Bitcoin is a signature of self-organized critical system, and this is the significance of our show, that I think it's probably unique in the investment world in general, in particular in the Bitcoin community. I don't think anybody brings this particular language that Chris and I are developing, that I think is the real way of getting alpha in understanding Bitcoin.
Yeah, and I think that's right. I mean, one of the things that really bugs me is that a lot of the forms of analysis that dominate what people consume and what people are fed focus solely on price, and that's not I don't think that's right. And I don't think that's right because I view price as being the footprint of structure.
Sure.
And everything that I just described about how the agents participating in the Bitcoin market today have evolved and changed from what was is completely demonstrative of that. If you ignore how these people transact in markets, why they transact in market, and actually how a transaction is affected and implemented, if you ignore that, you do it at your peril, because these are the things that actually cause people to transact, cause transactions to occur. And you have to understand them, and you have to be able to track them and monitor them in a way that traditional technical analysis and other metrics cannot. So it's a brave new world, and if you're not using these tools, you're essentially setting yourself up as cannon fodder.
Absolutely. Okay, we covered a lot of material. There are a couple of questions. Actually, one comment. Campi is one of our loyal followers. Thank you, Campi. Yes, we are also excited to be back. We will try to be more regular. Please also get the newsletters, sign up for the newsletter. The indicators that Chris are showing are available. You can go to the website. You can click on the different icons for the different indicators, and you can subscribe to them. They are very reasonable subscription price. That I think it's actually a very good deal. But the newsletter is free, so it doesn't cost anything to sign up. And you can get also the preview issues that you will learn a lot by reading them and trying to understand them. We do have a proper question with this one. Do you want to say something on this?
Let me just read it. So the question, does the QE that just occurred have any effect on liquidity for Bitcoin, or is that just a narrative people are pushing? So the brief answer is yes. It definitely could influence Bitcoin, but how it plays out really depends on deeper structure. It's not automatic simply because money is loosened. It's a bit of an oversimplification, but yeah, there's a knock-on effect. And remember, this is because everything is now interconnected. You have to understand that Bitcoin has evolved. It's still this decentralized marketplace and this currency, essentially, or store of value, if you want to call it that, or a medium of exchange that is not governed by a centralized government policy or reserve bank or equivalent. It's autonomous. However, its entire set of rails and infrastructure is now melded to the traditional financial system because it's been securitized and it has been accessed through these different products that have proliferated. And that means it's tied to the balance sheets of companies that are involved in it. It's tied to sovereign balance sheets to the extent that there are sovereigns involved. It's tied to the settlement process. And because the settlement process is so massively complex it has these knock-on effects across assets, and that's very significant. So all of these things are now interconnected. It's not sort of going to just move in isolation.
Very good. And then there is this question: is possible to see further analysis based on other indicators like the PLO, I guess, and SCO?
Yeah. So sure. Maybe the next session we do, Giovanni, I can showcase some of these other tools and how they
Sure.
work. There's a suite of tools, and you'll notice there's a slight difference between the post that Giovanni sent round a little bit earlier versus what's currently on the website. There are currently 5 tools available. As I mentioned, they're orthogonal. They all do totally different things using totally different methodologies. They work in unison with each other. They sort of supplement and work symbiotically to try and identify structural vulnerabilities that can result in price moving in a particular direction or with a particular velocity or momentum, whatever you want to call it. And what you're seeing on the screen, if my screen is still up there, is just 2 of those tools, the TPM and the LPPLCP. And in the bottom, if you can see it, there's a table with a series of colored boxes for the static and the pulse. And what this is doing, even though we're in the daily time frame at the moment, this little grid down here is showing what the static and the pulse are doing. So what these 2 lines are doing across multiple time frames, and you can select those for whichever time frames you're interested in. But it allows you to observe the one chart that you're looking at for the time frame of most interest. Here it's the daily, and in this table down here, we're looking at are able to observe how these relationships of the static and the pulse are playing out dynamically as they shift for, in this case, 1, 5, 15, 30, 60 minutes, 2, 4 hours, and daily. And the daily, you can see we've got the double white status of the static and the pulse, but in lower time frames, these are all starting to move into more bullish territory. And then these other labels are measuring various metrics that relate to the interrelationship of these 2 lines, the static and the pulse, and their interaction with each other and with price. So I'm happy to do a session that talks about these other tools and how they work with each other and what sorts of things they're focusing on.
Yeah, we should do that for sure next time.
Yeah. Okay. Good.
Okay. I think okay, we have some non-random, but okay, I don't know. Fine, Freddie, what you base that assumption, but I think 60K seems very low.
I would love to know how that analysis was derived. I mean, I just don't understand. People can say it goes to $1 million or it goes to 0.
Yeah, exactly.
That's fine. It's an opinion, but please try and give us something that's meaningful so we can at least debate the analysis.
Exactly. And this one that says, so what the prediction, bear market, backup. I think, I'm saying I completely agree with Chris that, and this is something that I have really hard time to communicate to so many people. It's clear that something went, and I don't say wrong, it's different, because while bubbles are exciting, they're also very draining when they happen, right? You are getting exciting when you go up, and then when you go down. In the past, these bear markets were all the way to 1 year. They were as long as 1 year, and they were down all the way to 80%. So many of us that are in Bitcoin for several years, like myself since 2012, have lived through that, and it's not fun. The fun part, I don't know if the non-fun part, no, sorry, I don't know if the fun part makes up for the non-fun part, And in the end, all what you got was the power law. If you didn't really act on trying to solve a top that very, very few people were able to do, in general, the end result was simply the power law. And so if we continue along the power law with some oscillations, now we have to understand, so far we have seen large downwards oscillation. They were surprising to me. I thought that maybe it was kind of symmetric. We see maybe 10, 15% upwards, maybe same downwards. Now we have an oscillation that is about 25% away from the power law. I don't think we will see much bigger than that, but it's a new regime. So while I think the underlying theory of a power law that this is a scaling phenomena over a long period of time, it should still scale up as a power law. Nothing changes from that point of view. At the micro level, things should be different. And we are seeing evidence of that. And so I don't know. I don't think we are going back to 180, not within short amount of time. Now, eventually we will be 180. It's going to take, I don't know I don't remember what is the calculation, but even by next year, we will be around that value. Next time I can tell you, I can show you some projections, what happens if we move along with power law. I think that right now, in the absence of new data, because when things change, the beauty of having models of the past is also to compare the past with the present, because they are still useful even when they don't work, because you can say at least, okay, now something is different from before, and you can even quantify. You can say what is different, how is different. So, for example, right now we know that the component that describe the deviation from the power law, that doesn't work, or at least didn't work this time. Now, it doesn't mean that in 4 years from now we still see a bubble, but because there was a decay, if this one was 80%, I don't know, I don't remember what is the next one, maybe only 30, 40. That goes anyway within what is probably normal for Bitcoin to oscillate anyway, because the beauty of Bitcoin as an investment, that it has still this long-term trajectory predictability, and it has a lot of volatility. That if you know how to use it, no investment advice, but we suggest to the beauty of getting these indicators is that you actually can learn over time how to use them. I use them all the time. I use them to do option trading, for example, right? And I know there are some people in the community that scream every time you say trading, but they are sorry to use the word, they are stupid, by definition, because they don't want to learn about stuff. And like, again, I'm not giving you any financial advice. I'm just telling you what I'm doing. And if you do it correctly, if you do it patiently, if you're not doing anything stupid like using 100 pair leverage, that is what fuels actually some of these moves, are these crazy people that want to get rich immediately, and they use enormous leverages, and almost all the time they lose money. I think there are very few people that make money by using crazy leverages. You want to use maybe a little bit of leverage, or maybe you want to do some hedging with options, etc. There are ways of doing it over time. Try to do it. It's a learning experience. You don't have to do it with a huge amount of money. Do it with a few $100s. So you learn new skills, you learn new ideas, you understand how the market works. And so it's an educational experience. And so you can do it over time and feel more confident, and maybe you can learn how to get. Right now, I think really sincerely, the best way to be a Bitcoiner is to hold Bitcoin, but also use the volatility, because if you don't use it, then it's not fun. It's not something useful. It's actually a nuisance, right? So you care about the long-term trajectory, and you get nervous about the volatility. But if you know how to use it, then it becomes actually something that it's a plus. It's your friend. So that is what I think it's the usefulness and the relevance of the indicators that we are developing. You can use them for your advantage. And even even just be happy even if you were able to get, let's say, even 1% yield a month. Over time, that 1% could multiply your Bitcoin by huge factors. Like even 1%, one time I calculated, it's a long-term game, 10 years, but we are playing for the long term. 1% a month gives you 3 pair over time if you compound it. And it's achievable. I can assure you. In fact, right now with this big downwards movement, probably one of the best plays is cover calls. You can do cover calls. You can use the tools I develop, the ones that Chris develop, and they are very, very powerful tool to learn how to do all these things. Do you want to add anything to these?
Yeah. So, I mean, to the question of what's the prediction? I mean, I don't predict markets. I can't do that. All I can do is look at the data. All I can do is look at the information that we derive from these tools and make an assessment based on that. The larger power law analysis has a range that Bitcoin is most likely to trade between, as long as there's no general failure like the internet disappears or something like that, something extreme and exogenous that none of us would would enjoy. Can it move back to 180,000? Yes. Can it move to 60,000? Yes. Can it move anywhere else in between? Yes. I mean, you really have to look at the information that you have available at a point in time and make an assessment based on that.
Yeah. When there is these other questions, we're getting a bunch of new questions, and we can take a few of them, I think. If we have a strong deviation from the power law in 2026, the new market structure can decrease the probability Bitcoin price can hit a lower band. So I think you are saying with the new market structure, if we have a strong deviation upside, but then will mean we kind of go back to what we had before. And I think it's easier, and maybe Chris can correct me on that, to get strong deviation downwards, mostly on basically how fear and liquidations and all kind of things like that happen. Maybe there is some problem in make it symmetric in the other side, because I think once you start to get, I really believe, and we already saw that in the past, right? Anyway, right? That these bubbles were becoming smaller, and now I think with this big player, it's very difficult to get even two pair within the short time frames that we saw before, because usually, again, the bull market lasted 1 year, and we went up 10 times. Actually, the component where we went where the deviation was measured relatively to the power law was even shorter, right? Because we started from the bottom, there was 60% deviation from the trend. We went up, reached the middle ground, and then within a few months, we went up maybe 5 times, 10 times. That I don't think is going to happen anymore. I will be really shocked if that happens. Fast deviations towards negative prices, right? Losses, we see them happening right now. And it's some new information. It's interesting information, but there is this asymmetry right now. It's new data, and it should be taken in account. So I don't know. Now, if we go back and we see strong deviations upwards, I don't know if you can make a general statement just from that. We will have, it's a new regime. We are collecting data. We are learning what is going on. If there are precise patterns that seem to be repeating time, we will learn very quickly these patterns. Right now, I think this analysis where we look at shorter time frames is the more relevant one. This is why, for example, I also develop these indicators that are looking at these normalized returns, and you can use them to make Monte Carlo projections over 2 weeks. So if you can focus on what happened in next 2 weeks and use this to consistently do some interesting trades, like for example cover calls, it's almost like you have Christmas every 2 weeks, because you don't have to wait these 4 years for something big to happen. You can do something interesting with the market every 2 weeks, on a scale of every 2 weeks. Some people like to do even intraday, but if you want to learn, 2 weeks is a good time scale. So learn how to do cover calls, and do it consistently, and it will be a very powerful way to be a Bitcoiner, because you're not exposing your coins, you're not selling your coins, you use them as a collateral. So that is really the message that I want to convey to people, that there is something very useful in this way of thinking about the market, with structural changes that you can actually use at your advantage if you know how to read them. Do you agree with that, Chris?
Yeah, I would just say that as it relates to 26, 27, it's all going to be influenced pretty significantly by the nature of participants in the marketplace. So you've got a finite amount of supply, you've got a bunch of OGs liquidating, you've got a number of a number of participants through things like ETFs that are new to the marketplace, and the size of that potential participation, I think, has been underestimated. I don't think anyone has really taken into account just how big that participation might become as Bitcoin becomes more broadly adopted by not just institutions and investment pools of, from pension plans or endowments and foundations and other asset pools like that, but from the individual level. And by the individual level, I mean, mum and dad who've got savings of various kinds, and they put 1 or 2% or something into Bitcoin that they didn't. And if you think about, the amount of money that financial advisors like Schwab or Morgan Stanley and all of these others have, it's in the trillions of dollars, many trillions of dollars. So if that money accesses Bitcoin via securitized mediums like ETFs, which is what a securitized asset is, it's a vehicle that allows, everyone to invest into Bitcoin. And as other structures evolve that allow for participation, for example, people via treasury companies, which get a different sort of levered exposure than ETFs. And as the quantum of ETF types evolve and expand to give people different types of risk access to Bitcoin, you've got a new pool of participants that essentially change the amount of free float that is available for trading. And if sovereigns also get involved, not in the way, these first sort of trial efforts by much smaller countries did and failed, but if larger entities, larger countries, larger sovereigns actually start to accumulate Bitcoin for various reasons, and that's a whole other discussion that I'd like to have one day, then that changes the nature of holdings and the nature of the free float. And if the free float shrinks, then how much is available for actual trading? And that can have an impact on the volatility and price discontinuity that occurs as we start to move forward. And of course, there are shock events. So, and we just lived through some pretty extreme events for some of the treasury companies that are, still, I guess, suffering a little bit with price at the current level. But, that was a moment of doubt for a lot of those treasury companies that were late to the market and were buying in that 110, 120 type range and seeing price get down to the low 80s, even lower. So all of these things combine, and to ask generalized questions about, should we hit a particular level of 180,000 or whatever the level happens to be for the longer term Bitcoin power law, or a lower level even, it's the wrong set of questions to be asking. You really should be looking at what are the dynamics, what are the fundamentals that are driving the market, how have they changed, how do they continue to evolve, how do you measure and monitor those things, and what is the impact of those likely to be? That's it.
Correct. Yeah, I agree. And and I didn't because first of all, I was talking about, and this attracted a lot of negative comment. I was talking about sometime started next year, last year, about possible large deviations from the power law, right? Like we had in the past. And the one that I calculated was going to be 80%. Now, if we went 80%, that means kind of twice, right? From the power law, probably what I will have consider is to rebalance, right? That means maybe you want to sell some of your Bitcoin to stay in USDT with the hope that then you can buy back, right? I will have done it anyway with a small percentage, nothing. I will not have sold all my Bitcoin, only because nobody's saying, because these are the people that are saying these things that are, they want to get attention by attacking these very sensible things we are saying that are based on math, physics, understanding the structure of the market, and the advice are very conservative and very sensible. So it was not just a matter of, there were two things that were going to be aligned, both with timing, so expecting a peak where usually it happens in November, and also the amount of deviation. If I had two things and maybe other things were all aligned, then one could have felt, okay, it seems there is some indication that the market is going to correct. Maybe it's a good idea to rebalance, right? It's something that is done all the time in investing. When you are too much overexposed to one particular asset, you have this mechanic between USDT and Bitcoin. I know it's not how most Bitcoiners think, because they think they only want to. They have all these almost extreme way of thinking because it keeps you disciplined, right? Well, I know that. I do that often. If I want to lose weight, I say I don't even touch sugar at all. You get very drastic in your decision making. But with investment, and Bitcoin is an investment, even if it is more than that, you still want to be balanced, right? So that will have been a relatively good move, but also very stressful, very stressful. So in a sense, I'm glad there is no a bull market, because then, okay, we do something different. And I just said what you're going to do. What not you, because I don't want to give you advice. I'm telling you what I'm going to do. What I'm going to do since I'm doing this actually since quite a bit. I have two methods. One, I have these bots that I'm using that are using the idea of a power law and using the floor as a power law. I'm using futures, that is basically contracts where you can use your Bitcoin as collateral. So I don't touch my Bitcoin. I'm not selling my Bitcoin. I'm just using it as a collateral to trade with a bot. And the other thing I'm using Chris and the Chris indicators, and the one I develop to play with options, in particular cover calls. There are many combinations. Maybe in the future we can give you some hints on how to play them. I want to do also some videos about these cover calls, but they are relatively easy. For example, if you can determine a possible range of where we are going upwards, you can put a strike price upwards, and then you sell cover calls. It basically means you give somebody the right to buy your Bitcoin at a price that probably you're not reaching. They pay you a premium. You use that premium to buy other Bitcoins. If you do 10 times this play and you do it every 2 weeks and you win 9 times, you're not going to do it with all your Bitcoin anyway, right? And you can do it with iBit, that is also, there is more liquidity. There are so many different things because we have so many different tools, and that is the entire idea. The regime is also people should learn out and use, right? Now, you can still be hodler and don't think else, fine. It's people are free to do different things. We're trying to create tools for people that want to try maybe something different or some. I call it hodl plus. So if you want to do the plus component of hodling, maybe you want to learn some of these things. This all. Now let's maybe take a couple of more questions and then we can close this. So do you know what this question is about, Chris?
So this Hombre Nouveau. Hi. I can go into more detail on this in our Discord, but what you're alluding to is so he's looking at a 3-week time frame with those table of attractors that I showed you before, and one of them is showing a level of 65,000. So the question is, what is the influence of this 3-week time frame attractor on the lower time frames or the daily time frame? Excuse me. And the answer is, I don't think it's not so much about influence. It's more about the transition of direction as observed through each time frame as it washes from the lower to the higher time frames. And in that 3-week time frame, and I've not looked at it, so I'm speculating at this point, but I'm assuming that there are also some higher price targets, attractors, structural draw levels, the gravity wells, that would be shown in the 3-week table. And that's okay. It's okay to have these gravity wells and structural draw levels above and below price. They're both valid. And all it means is that either that 65,000 level is going to be hit at some point in the future, or that there's enough time that passes that allows price and time to coalesce to invalidate that $65,000 attractor level and generate a different attractor level that would be higher. And that would then populate as a green plot on the chart, as opposed to the red plot at 65,000. And what I just described happens in every time frame. So initially, if you're watching a 1-minute time frame and you're getting these attractors stacking to the upside, then price is most likely going to move in that direction. And then when they all get hit, so they were all green and they eventually get triggered and hit, you can't generate any more green gravity wells, upward gravity wells in that particular time frame, because there are no more. So all that can happen is that they can be reset to the downside. So price activity will move and will then generate new attractors that will be lower levels. And they might just be lower by a few dollars or a few pennies, or tens of dollars, 20s of dollars, hundreds of dollars, whatever it is. Those new levels will be generated, and then price will be attracted towards them, and those prices, those attractors will be either invalidated or they will be hit. And if they are hit, then all that they can do is regenerate again, this time to the upside. So this process is analogous to the waves on the shore, the tides going in and out, and you start with the lower time frames and you move up through the time frames until the process exhausts and reverses. So it's less about the influence and more about the process across multiple time frames.
Very good. This question, I don't know, because right now we don't see them. So again, I think our the approach of the people that I'm working with, like Chris or Steven, etc., it's all about data. So right now there is no data that shows that there are oscillations that are lasting 1 year or 2. If we see them, then we learn from them. Right now we don't see them. We saw these large oscillations from the previous bubbles. They seem to have disappeared. Maybe they will continue in the future. We just need more data. I don't see any evidence of that. If you have any evidence, please share it with us with a link, etc., and we will take a look. Maybe this is the last. Okay, I want to cover everybody. Let's cover these other two questions. Okay, and guys, come back. Thank you for all the good questions. We are very glad of your participation, but we cannot make this show 3 hours, so we want to keep it within relatively, like 1.5 is good amount. Okay, so this question about Caspa. So Caspa, the story behind Caspa is that my idea was no other coin shows power law behavior. There is some hint in maybe either or whatever, but none, no others. I was very surprised because I was asked by somebody to do the analysis that in fact, I started with trying to demonstrate that also this coin that this person was asking about, he was even, is an influencer. He liked Caspa. And I found some hint of a power law that was really pretty strong initially. Now, I gave a ton of caveats. I say, look, for a proper power law, you have to have many order of magnitude. It has to be established for a long period of time. So this is just a hint. So it doesn't mean that it will continue in the future. And it didn't. It didn't follow power law. Now, there are many phenomena that start like that, and then there are no conditions, and they die out. I don't know if there is a recipe for when that is going to happen. It depends on different situations. My thinking about Bitcoin is more like, can the scaling that we are observed go up for other 2 order of magnitude? Because we went up 8 order of magnitudes with Bitcoin. If you look at the first transaction ever, and by the way, the transaction falls on the power law, the first ever transaction between dollar and Bitcoin, that was 5,000 Bitcoin for $5. Can you imagine? Crazy. And it falls exactly on the power law. And where we are now, it's 8 order of magnitude, or 100 million times, right? And my way of thinking about this is, can we go up another factor of 10? Yes. What can stop us? Now, it's big because now we are talking about, going from 100 million to a billion. It's a factor of 10, but we are talking about more reasonable money if you're looking at all the money available. Going from 2 trillions to 20 trillions, that we are talking about basically Bitcoin becoming like gold, having the same market cap than gold. It's a bigger challenge, right? So, but from a scaling point of view, should be similar, because that is the entire idea of scaling, that every scale is similar. The only thing it changes is the time that it takes, right? Because it is going to take 8 years, while before, going in the past, we were going up the first few years, we were going up by a factor of 10 within a year, or maybe 2. Now it's going to take 8 years. Now to go up 2 orders of magnitude, that I think is still achievable, because we are talking about 200 trillions, that is kind of roughly on the same order of magnitude of all the real estate of the world, right? It's, again, an enormous challenge, but it will take 20 years. Can we do it in 20 years? I don't see any real fundamental reason why we should not be able to go there. It's going to be challenging, but I don't see why not. In particular, because the scaling, that is the entire point about the power law, gives enough space and enough time to do it. So that is where we are thinking. Now, if you are saying, the 3, 4, 5, well, when we are going to run against some walls, right? Because that is the entire wealth of the earth, unless AI is bringing a new era of wealth and well-being for all the human beings. We start to mine asteroids and we do crazy things like that. Then maybe. But I think we can go up at least 2 order of magnitude, right? But again, it's an hypothesis. It's basically an idea that, okay, if we do it, I think it gives us an upper limit it doesn't tell us that it's a guaranteed process, right? It's challenging. What do you think about that, Chris?
Well, CASP is not something that I've spent a lot of time thinking about.
Yeah, it goes beyond Casper. You wanted to say
Yeah,
it came back,
it's
basically.
not. Well, first, it's not as old as Bitcoin, so there's not as much data, I assume. So that's probably where I'd start. But moving on to your broader points, I come back to the roadmap. I mean, we have your theory that describes where Bitcoin is likely to move over time as a function of the power law formula and methodology, and then you've got a GPS, and what we don't know is what the exact path is in the future, but we have the ability to identify what some of the short-term probable directions are going to be as a function of all of this analysis. It's not always right. We can't really predict. We're not trying to make financial advice here, or it's really about educating and trying to understand how these various components evolve and how they influence and impact price and its direction. And from time to time, there will be extraneous or exogenous events that shock the system in one way or another and cause significant deviations of price from the mean. That'll resolve, and then the path will continue.
Correct. Okay, and about the option, yes, we can make some video. Maybe we can even do it together with Chris, explaining some of the steps. But I do want to do even some live videos on how to do it using IBIT, for example, because for the US people, IBIT probably is one of the best things. You can start to DCA, both on Bitcoin. I know, again, for the super maxi people, IBIT is not Bitcoin, but it gives you the same exposure. And whenever you're ready to get back to Bitcoin, you can sell IBIT and buy Bitcoin. But the beauty of IBIT is that it has an option chain that is more populated because there is more liquidity. It gives you some securities that you don't have to keep your coins on an exchange that are becoming more secure. But you can buy IBIT. Okay, it's an exchange in a certain sense, but they are more regulated, right? Like you can do it on Robinhood, you can do it on the different brokers that are available in the US. I need to find out what a European will have to do, but I'm sure that they are starting to allow European people to actually get exposure to some of these Bitcoin ETFs. Okay, we will work on that. Thank you for asking. Now let's. This is a comment, and I think this is a good place where to. And thank you so much. We are very grateful for your appreciation. We are trying to do our best to convey useful information based on real stuff. Like science and a deeper understanding of the market. So I'm also very glad that I found Chris and we're working together. Okay, guys. Unless you want to make some final remarks, Chris.
No, this is good. I mean, hopefully we'll do these more frequently than we have in the last couple of months, but that's been impacted by your travel schedule. So I think we've got that figured out now. There's so much going on and so many different things to talk about. And, the role of Bitcoin is evolving as a function of many of these things that I've alluded to. I do encourage everyone to download and read the prior newsletters, which you can get by going to Substack. So it's
we had I can post it again. Here, this one.
It's complexitytrading.substack.com. So The first 3 newsletters are up there. Gio's working diligently on the next. But there are just so many different topics for discussion here as Bitcoin evolves, as the participants evolve, and as all of these new dynamics start to wash through the market and influence price in ways that people really haven't thought about previously.
Yep. All right, guys. Thank you so much to be with us, and we will be here. What did we say? Probably 1 hour later, right?
Yeah, around noon
Yeah.
Eastern.
Noon Eastern. That is 6 p.m. Central Time, European time. Okay, guys. Thank you so much. See you soon.
Thanks. Bye.
Bye.